At the moment, I think the big thing that came through was there were local reports that there was no damage to oil infrastructure in Iran. That was one of the threats. I think in the morning when you saw Brent's prices spike to as much as 13%, we're now up 7%, so we've kind of curbed back, still up a lot, but not where we were a few hours ago. I think the market was carefully watching what's the impact on the oil physically in the market right now, right? If there was any impact on Iran's oil production capacity, their ability to export, their ability to store the fuel or refine it, then clearly that would have an immediate short-term impact on the market. That's what the market was looking at. It doesn't seem that there was any impact there. The next, of course, is how Iran responds and whether this kind of spirals into a larger conflict that does involve the Strait of Hormuz. I think one thing to note about the Strait of Hormuz is that shutting it down is difficult. It's also detrimental to Iran. It would hurt the relationship with their neighbors like Qatar, as well as their own economy, because they depend on that trade conduit. But that being said, you could see potentially ship owners tell their vessels to not go through or evacuate from the area. We haven't seen that yet, but if there's a prolonged conflict, then you could see sort of a situation where the companies themselves are moving away from there, and that could reduce the amount of supply of oil and gas on the market. Still not exactly to be seen. We've seen the 100 drone strike report right now, and how does that play out? Is there more after that? And again, as was said in just the interview before me, is there more to come from Iran on Israel, and how does Israel kind of take it from there? So we're certainly in the wait-and-see situation for oil traders at the moment.
And Stephen, as we speak, we're getting more lines in terms of the details around the size and scope of this Israeli attack on these nuclear and missile facilities of Iran. The IDF saying that more than 200 Air Force planes struck 100 targets in Iran. Lines crossing from Iran as well, saying that the world now sees why we insist on nuclear enrichment. That line coming through from Iran. The world now sees why we insist on nuclear enrichment. The IDF saying that more than 200 Air Force planes were involved in targeting 100 targets in Iran. In terms of the developments in the oil space, Stephen, you've talked about the complexities of Iran shutting down the Straits of Hormuz, though that is potentially a risk. In terms of how you fold all this into the demand picture right now for oil, how does that reshape how we think about it?
Yeah, I mean, when you look at the oil market at the moment, if there were ever a time to have this sort of risk, a supply-side risk, I suppose it would be now, because the market is looking pretty frothy. It's oversupplied. We're at Brent right now. We've jumped up to as high as $78 Brent today, but at the beginning of May, we were at $60 because we were worried that the trade war was going to sap demand. There are fears that, Chinese, industrial output has been lagging, and therefore Chinese oil demand as well would be pretty weak. What Trump is doing with unilateral tariffs risks a slowdown in economic activity that would also weigh on factories using oil or people using gasoline to drive their cars. So we're in a picture where the oil demand is not as strong. So if there is any sort of reaction here, or if there is some sort of reduction in supply, at least in a short-term period, then you wouldn't see necessarily the shortages or lines at gasoline stands. We're not in a market that is terribly tight. That being said, this is all, we're in unprecedented territories if the Strait of Hormuz comes into play. While it is a very remote possibility, it's a situation that the market, while the risk is small, is clearly responding to with the gains in prices today.